From our Stars and Dogs segment, it's time for this week's Star.
Okay, so the star of the week is MamaMancini's holding, or MMMB, on the NASDAQ. The stock is up about 44% in the past month and 118% year to date, where it's now trading at about $3.88 with about $142 million market cap. So MamaMancini's manufactures and markets prepared refrigerated foods primarily in the United States. The company offers beef and turkey meatballs, meatloaf, chicken, sausage-related products, and pasta, entrees, et cetera, et cetera, et cetera. And it sells directly to supermarkets, club chains, and mass market retailers, as well as food retailers and distributors through their website. And listeners have probably heard us talk about the company before. Clients have definitely seen monitor reports, as we did highlight MamaMancini's as a monitor in our US under 2 billion market cap profitable small cap special report, which came out in June. Now, driving the increase here has been, number one, the company's strong financial results. So for the most recent quarter here, Q1 of 2024, they posted a revenue growth of about 6%. Gross profit was up 65%, primarily due to an increase in prices, as well as easing of commodity prices such as chicken and ground beef. And earnings per share was about 4 cents per share, compared to about break even for Q1 of 2023. And I've included here, for viewers that are looking on YouTube, just a graph to show where we had seen margins come down quite significantly due to elevated chicken prices and ground beef prices. But we have been seeing margins recover here. Now, the company also has a new CEO, Adam Michaels, who we recently spoke with on the phone, and just got to kind of get his vision going forward. And essentially, we can see here that it looks to be that the company is entering into a new growth phase led by Adam, where the company is targeting to become an all-in-one deli provider. And he's also provided some gross margin targets, including greater than 30% gross margin and mid-single-digit net income margins. And over the longer term, net income margins of about 10%. And also what's been driving the stock is the recent acquisition of Chef Inspirational Goods, or CIF, which is a deli prepared food sales agent, which is expected to be accretive and drive immediate gross margin and operating expense synergies. So overall, and this is essentially what we wrote in our report and why we thought that it traded near fair value. If we hypothesize that the business can generate over $100 million in fiscal year 2024, all while generating 5% net profit margins, on a forward basis, the stock was trading then at about 18 times forward earnings. Now it's trading at over 25 times earnings. Now, there certainly is a case to be made that the business could continue to offer value if management can continue to execute and actually get those net income margins up to 10%. But at this point, an investment all comes down to management's execution over the next 3 to 5 years. And that valuation with the growth just makes the stock look like it trades near fair value. But it's a good business, very interesting. I haven't tried their products, even though I know that the guys, I'm sure, are going to tell you that I have and that they're my favorite. But I will open it up to the gentleman here.
I'm
Anybody
just waiting
else hungry right now?
Yeah.
A little bit.
Whenever
Ma,
we
get
talk
me
about
some
Mama
meatloaf.
Mancini, I just want to eat some pasta.
No, we're really waiting for the meatballs in a cup. That's what we're waiting for, aren't we?
Hey,
We
did
were
we ask
promised that
before?
in
Is
the
it
meeting.
available in Canada?
It is not.
Yeah,
We have asked.
Yeah.
We're waiting for them to be delivered.
They are in Costco's, but just US.
Just US.
Yeah.
Costco's. Okay.
Our last interview, certainly, we enjoyed our interviews with the previous CEO, but the vision from Adam was probably better and more concise, and learned to talk to the markets better, and positives from the interview that we did with Adam, and he's delivered on profitability where the business was not delivering for significant periods. Hit hard at one point, I believe during COVID, but now, and, after making those acquisitions, the two new additions really, I think they're going to continue to grow by acquisition, but, the last couple quarters with the profitability there was quite interesting.
For sure.